tryna take it down, placeful. You just scoring mines, best the bar.
All right, ladies and gentlemen, I got your Watchlist coming in February 4th, 2020, and the world is watching China. Despite having a pretty decent bounce today and China going down, every single market in the world besides China ended up positive. So there was pretty much the Asian countries ended up down, but Europe, Canada, pretty much everywhere. I guess you got a little bit of Russia right here. They barely dropped, but we're going to talk about that. But everybody did good today, despite the Shanghai composite closing around 7.5%. So this is really important. This is setting something up. I had a big theory I talked about live on stream. I'm probably going to share this tomorrow more in depth as we see this play out, but you could also watch the live stream if you want to check it out. But what we do from here is watching China and how this proceeds. It is setting us up for something interesting. And then we have the earnings. We played Google today. That was an interesting one. We hit it right on the head. That could be our third week of 1,000% gainers. And I will go over the play we made there. It was about $150 into $1,100, and I did two of them, so total like $300 to $2,200. There was a unique situation provided by Google, so how we played the earnings and the reaction and everything is looking good. So I'm gonna go over that, some basic keys for you, and then I also want to talk about tomorrow what we're looking for and some of the main events happening right now. But before we do that, make sure you guys are subscribed, make sure you drop your thumbs up on the video, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. These free 99, we better see you there in the morning. There's a lot going on. You need updates. You want to watch all this live, be there. We made all the trades today live. I grabbed another play today too, one of those 1% $200,000 to $20,000 plays, so we'll cover that as well too. But we went over this earnings play. I did two sets. I even went super slow to explain it. So the point is, be there live, and let's source that information. So don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. If you got any plays, comments, anything with earnings, ideas, theses, post them there below. And we did the random comment generator. Shout out to Dylan Reed, baby. We picked up a Coca-Cola call on the random account. That's what he said. So thank you for all posting plays. You are helping us complete this experiment. So thank you. But right off the bat, the most important thing that we are looking for here is that global markets reacted positive to China's response. What we are seeing here, this is kind of the gist of the thesis, is that we need the problem to get worse, aka throwing the kitchen sink does not solve the problem or more problems emerge, or kind of this hype wears off from this response and people again lose confidence in what is happening. So some people are calling this a dead cat bounce. For me, this looks a lot like 2015. So my original thesis and what it is, and just kind of asking why China did what they did, seeing the response, seeing the public's response, it's going to create a situation for emerging markets and China to diverge from the rest of some of the more developed markets. And that is very, very interesting, because when that happens, it creates big moves or big moves down, or even big catch-up moves on the upside. But now something happened today. This is what I was talking about. Again, look at commodities, but oil, this is something huge, huge, huge to watch. You rarely see a big problem with China without oil getting affected, because now oil is getting killed because of this situation. OPEC has talked about it. OPEC is even meeting up. They're trying to combat this, but the simple problem is there's a global demand problem. China is responsible for a lot of demand. So the fact that parts of their economy are closed and that it is, the economy's at a standstill because of this virus, it's impacting the rest of the world and all the oil producers, because you have one of the biggest consumers of oil out of the market right now, are not using as much. So what this is creating and the ripple effects and what this could potentially do to everything is very, very important. But pretty much like I said, this is the same thing I said on the watch list yesterday. Give it till like February 10th, February 14th. It's going to take time to develop. It's going to take a lot of patience, so you better be there on stream, and you better learn to balance the books and scale in. But as we start to see more and more happen here, the key is watching divergences. Again, oil is one of those industries now. Oil has broken out of its Wuhan zone. It's dropping. It's plummeting. China's dropping. It's plummeting. What's going to happen here over the next few weeks is we're waiting to see how the market interprets and the rest of the world interprets what's happening with China. But if we see more commodities fall off with prices, you see more indexes go down, more countries, that is going to be the problem. And I even explained it today. The statistics do not matter now of the coronavirus, meaning that it doesn't matter if there's more or less cases, because at the core of it, with how it's affecting demand, if this situation does not get better, right now their economy is pretty much at a standstill. It's having a big economic effect. The question is, can they return to service or not? That is all we really need right now. And if that doesn't happen, I mean, think Boeing, I guess. No. But that is something huge I'm going to be watching these next few days, and it is very, very pivotal. And lastly, watch the currencies. We saw what happened here with the yuan and the yen, and the yen did pretty good, surprisingly. This kind of reflected our markets, but the Chinese yuan is now back above that 7.0, and they've been doing a lot. And even now, this is going to be interesting to see how this plays out, because this has been tied into the trade deal and the whole currency manipulation stuff. So now we even saw that news today, and the market again was killing it this morning. But then the news came out, it went up a little, but we didn't go up any higher from there. But the news was that China is requesting a phase 1 extension or some sort of waiver with the trade deal given the coronavirus now. So we're going to get an official response from the Trump administration, and we'll see what happens. But all in all, watch how the currency plays into that. But those are going to be some of those last final legs. Once the currencies start going, that's going to tell you stuff. And ultimately, even with all of this, what we're even looking out for is to see, is there that return to service? Does the economy get back going? Do all those industries get back up? That's why I'm looking at all these indicators. If they do, we won't see more downside. If we don't and things continue how they are, we will see more downside, and it's putting us surprisingly in a very fragile position. So there's that. And lastly, tomorrow there is earnings. Again, we had the Google earnings and all that. We will go over that, but you're going to get Snapchat and Disney. I'm considering getting Snap. I think I'm just going to wait till after earnings. I think I'm finally, set that in stone, but they're going to be interesting earnings. We might be able to play options on there. Again, we're long-term shareholders. And then there's Disney. Disney, I don't think I'm going to play as a strangle or using our criteria, but I might play Disney how we played here today with Google, using an iron condor. So that being said, let us get into the plays. So this is the Google play, $100 into about 1,000, give or take. But this was a very interesting play in what it set up. There was a few factors, and we even got to see from the last earnings what made this so attractive to do the iron condor. And again, we have videos on this. If you search the Trading Fraternity Iron Condor, if you even go to the live streaming channel, it's all in the description as well. If you guys have a helpful video for iron condors of ours that has helped you, post it below for some of the other people. But again, wait till that live stream gets posted, and you could watch me explain this during the live. And I even went super, super slow, and I even did one of the plays here on Robinhood. So you guys will see how it even looks on Robinhood. There it is. But I did 2 of these plays now. The first play I did middle of the day, which isn't, and again, it's because I had trouble getting filled, and I knew I was going to have trouble getting filled. When you do an iron condor, you're filling 4 different options at the same time. And for those who don't know, an iron condor is selling 2 credit spreads at the same time. So you're hoping that the stock stays in between the prices of both credit spreads, and if they both expire worthless, you keep the credit. You essentially are saying the stock is going to not go above this price and not go below this price. But the first play that we made, it was a February 7th, so I did a weekly condor that expires this week, and then this one is for next week. So again, we'll be able to even compare these tomorrow, and you guys can see how the values change and all that. But the first one was a February 7th. We sold the 1440 call and then bought the 1442. We did 5 of those each, and then we sold the 1425 put and then bought the 1422.5 put. So we got $220 credit, so $30 risk per contract, 5 contracts, $150 risk, 220 times 5 is like $1,100. That is the max potential gain on that play. So that was the first one we did the middle of the day, and then as usual, I waited till end of the close to see kind of a better idea of where the market is at, and then we did the second play here, which is almost exactly the same as the other one, but this one offered a little bit more of an advantage because it let me widen the range a little bit. The first one was 1440 call to 1425 put. This one is 1445 call, so it gave us an extra $5, and then to the 1420. So I got to widen the range by an extra $10. That's pretty helpful, and there's more time, and this is what you guys will see tomorrow with these iron condors. The one with time will probably be easier to profit on than the weekly, but you have a better chance of reaching max gain with the one with less time. But pretty much what both of these plays are, it's even telling you here on this one with the weekly, your break even is 1447.19 and then 1417.81. So what it's saying is that the stock stays above 1417.81 and below 1447, you will get the max gain of 11,100 right there. And then on the other contract, just take away $5 from here, or add $5. So it's like 1420 something and then 1442. So now when you come and see here, this is an interesting scenario because when we made the play, the stock was at 1483. This condor was a directional in the sense that I was more bearish and I was expecting this to happen. So you could go watch on the stream. I said I don't expect now Google to move more than $40 for earnings. And now, why did I say this? Because throughout the day today, Google gapped up and it moved up $40. This is something we've talked about, where on earnings day, sometimes it will make the earnings move at earnings. So then whatever happens at earnings, whatever happened throughout the day is kind of like a buffer. That's one of the reasons. But ultimately, when we're comparing this, I wasn't expecting Google to have the same effect as Amazon. You guys see this is Google overlaid with the SPY. For the most part, they've gone hand in hand. So it's not as if Google was undervalued. If anything, people were willing to pay a premium on Google, and all of the earnings was priced in. So even though they did good, they missed by a little bit. It wasn't enough to bring the stock down, but it also wasn't enough to bring it up, because based at the price it was at $14.40 at earnings at open, or today, that was pricing in earnings that would hit estimates. That's the way I saw it. That's what I was expecting. I was like, well, I didn't think it was going to go up or even move down that much. And now something to support that thesis was when you looked at the option chain, all of the Google options went crazy. So you could see here, these are the ones at the money. Most of the contracts went up 50% or they doubled, but it was even when we go really far out the money, it just gets sickening. There's a contract going for $400. They were going at $14.90 by close. So the calls were expensive. And when you did the calculation, they were pretty much, it was pricing about an $80 move, and then it already was up $40 plus pricing. It was pretty much pricing in $120, and then you even go to some of the puts here. The puts were still expensive all across the board. See, and these ones are super far at the money, but they lost value, but they were still expensive. So what this reminded me of, and that we showed this on stream before I even made the trade, was Apple. This looked a lot like Apple. So you even come to the February 7th. And what I mean by that is that the contracts are so expensive, even if it had a good or decent move, it would be hard to reach that break even and you would lose both ways. So again, if I thought the premiums were too high and I thought the market was expecting too much, the answer there is sell the premium instead of buying the premium. And that's what worked out. But here you see on Apple, this was a good point I brought up here, because from here to here, this was when they had their earnings. But if you bought some of these companies the day before earnings, I mean, you really didn't make that much. Even the ones in the money are cheaper now than after earnings. So even if you bought this on earnings, you were making like $500-$600. The out the monies, you paid $9 to go up $200. The contracts for Apple were so expensive coming into it. Even on the put side, it seemed that regardless if there was a big move, there wasn't going to be really an opportunity to capture a big profit with the options. So now, putting this all together, the biggest trick here, I would say, is seeing how a stock could already be pricing in earnings. This is the number one thing I've already told you guys many, many times before, is that when you come into earnings, again, this is why I say they move in packs, and watch out, because when they move in packs, sometimes coming into earnings, the company could make the earnings move before earnings, and now whatever price it is coming into earnings, that's kind of the top end of what the market was already expecting. So even if they report and it's good, the market has already priced that in. You have to be able to recognize that, and you have to be able to see when the option chain is telling you there's high premium, and you got to learn how to do the iron condor. So again, watch those tutorials. But you see here, we're probably going to be up on those. I know the weeklies will be up probably like 30-40% minimum. I think on both of them. Again, on the first one, we're like $5 out the range. But with the iron condor, since all those premiums were so high and now it's dropped and that IV crush is there and then it's actually in our range, at the very least, even if it falls out of the range for a little bit, those iron condors will still be profitable because so much premium has died and decayed. So that was the first play that we made today, or that was the first one I want to talk about. The next one is UNH, and this one was interesting. They didn't really go up with the market as much today. They only finished up 0.25%. They had a big move, but they were down like 1% at one point. But what we did on UNH is we did a February 28th, 25 days out, bought the 240 put and sold the 230 put, and we got that for $55. So they have big spreads, so your value on that might fluctuate. I mean, during the day, it did go up about almost 100%, which was nice. But the main reason why we bought this, again, with my whole theory in place, I wanted to scale in a little bit and watch, and play these waves with the market. I didn't want to get too aggressive, but there was a unique situation. All of the healthcare stocks started dropping, and as we were seeing that into that first drop there, saw an opportunity for us to both play the downside. And again, that play is $50, $55. Max gain is $9.50 after you subtract what you paid. But we saw the opportunity to play downside with the put, but now this is going to cover some of the election fear. And I say fears because it has to do with Bernie Sanders. There's the Iowa caucus stuff tonight, and Bernie Sanders has been gaining steam. And actually, people in Wall Street are worried about that. Bernie is not good for Wall Street, but now specifically healthcare. He did this back in 2019. I forgot what speech it was or the actual setting, but you see here April 10th, they had a bad February. There was talks about it. Again, the whole market was kind of doing some stuff. But then April, you see a big drop in UNH and all the healthcare. That's because this Medicare for all stuff, people thought there was a good chance of it. It really had a negative impact on healthcare stocks. So if Bernie is able to surprise, he keeps gaining up in the polls, he wins that, it's definitely not looking good. So this is why we made that play. It gave us downside exposure for the next 30 days, roughly. But then also, it is also tied to a secondary event. So even if the market didn't go down or whatever, even if the market bounced, but then this Bernie stuff happened, it could have still brought it down. So I saw it as 2-for-1 win-win. That's why we took it. But this is just simply related to the politics and how Bernie's policies, or if anybody now, especially if they've been vocal or have a history with it, if they threaten certain industries and they gain traction in some of these elections, it could have a negative impact on stocks and investors will react. But people asked me about this play today. I even said it's the same. The main logic is playing this event with Bernie, and then again it offers the secondary as it dropping, but they're like, what's the exact play? You could make this play kind of work however you want. I did mine. I did the debit spread to get, the 240 is within one standard deviation with the money, or excuse me, two standard deviations, but like 240 is pretty much like right back below that first gap into this level. But you could have pretty much played anything. It was up to you as long as you got time and went to your budget. Again, you don't want to get the furthest out, and those are going to appreciate less, but you can find a play that works for you. So this will be a good play to see. Again, we'll probably see the results by this in the morning, but as that situation goes on, I definitely think, especially even election season, UNH and healthcare, those guys are going to be very, very vulnerable. So there was that. And then the last play we made was an IWM. And I think I'm going to go over this play because I might pick up a different set of something like this tomorrow. But I pretty much made a play on IWM that says it's going to reflect this similar move here that it did at the end of 2018, which was about 27%. This play, we're saying that it's going to go down 26%. You would turn $200 into $20,000. But I like it because these plays were cheaper or more expensive. They got cheaper with this. And again, how I'm feeling with China and what we're seeing with the demand and all that, I want to make sure I got a little bit more exposure besides the other stuff, but I liked it because I got Marches. So what I did with IWM, I got 50 March 20th. I got 50 129 puts, and then I sold 50 125 puts. So $4 difference between those. Debit spread, $200 put on there. If it hits 125, which is about a 25% move from here, those would go up to $20,000. These are my plays that I'm keeping in the event that there is a shock or big surprise, or that these problems with China continue. So that play's not going to be for everybody. And the best part is, if my theory's correct here and we're going to get a few days or even a full week of kind of chilling out, these should depreciate. And I'm well aware of that. So I'm using these even again. I did want to get them today also as a place marker. So those were the three plays we made today. I think they're all going to be important. We are going to be watching the Google tomorrow. I know some of you guys, again, look at your accounts. Have you made money or not? How was this last earnings? Use that as a judge and determine if you want to take profits or not. And please don't forget, option trading is extremely risky. You can't lose all with financial investment. Please do all financial advice, educational purpose only. Thank you. But be smart, be wise. Again, we will get to see what's going to happen. The first iron condor, again, since it's slightly out the range, I'm really excited to see if that gains or loses value. But now, as long as it stays in this range here, I know for a fact the one with time is going to be up at least 30% tomorrow, which again, that'll be a few $100, and it is a very, very small investment. So watch that, watch all those. As far as everything else, I want to watch Apple. They closed down red today, and this is very weird, especially the days that the market has been closing red. Apple was closing green. They had a big sell-off on Friday. They were down even more this morning, and then they bounced up and came back down. Again, I just showed you guys those puts. The contracts are in a weird, precarious place, and they're having that earnings hangover. You want to let this develop because those contracts could get very, very appealing and cheap. Then TLT. Those contracts depreciated a little bit, but they're still expensive. There is the ex-dividend on TLT. Let's see how that makes an effect. But TLT still, this is a big danger zone here. So we'll see if we see a move like this and then it leads to the drop. That could definitely potentially happen, but we're going to keep our eyes out for those. And I like TLT. Then the UVXY, these are tempting me because I think, and it's showing, that's how you could tell we got a pretty decent contract. That last spread we went over, even those TLTs, remember we used the trick to get the cheaper puts. They were all over the place. That play was close up 100% on Friday, and then by today that play was down 50%. Then it came back to break even, and then it closed today at 15%. So pretty much what this is saying is UVXY either wants to drop or it wants to rip. Again, it has to do with the market, so I'm a little intimidated because it could quickly lose the value. But that being said, now I will want to snipe UVXYs the days that those contracts start going green, and then they're showing that they have the ability to go green almost instantly. That is going to be very, very unique, and I like it. So I might want to snipe some of those. But keep your eyes on that. Again, I think both TLT, UVXY are going to be very, very important here. Then watch Microsoft. Pay attention to the laggers and leaders. They hit 52-week highs. I think that's very important. Same thing even with Tesla. Tesla went crazy. Those were 1,000%. You could have put $100 on any call contract, and they went up about 1,000 to 1,500%. It was crazy. So congrats if you hit that one. I'm gonna keep my eye on it. I'm still not ready to get into the Tesla. I'm just kind of watching and admiring. But be smart. I know some of you guys are going for the debit spreads. I think anything is possible. I mean, at this case, so I know some people have like 900 debit spreads. Just ride it out. Be smart. If it does get up, remember you can close a debit spread and still make money on a debit spread without it going in the money. So that might be your bet, your other opportunity if you start reconsidering your strike prices. But watch them. I think they're going to be interesting. And again, even related to this oil situation, they're kind of getting a many things working in their favor. Then watch NVIDIA again. They closed up 1.5%. They have the earnings. The contracts are starting to bake in some of those losses as opposed to what we saw on Friday. So that'll be interesting. But if they start running back up again, pay attention. The contracts are cheaper now for earnings, if anything. Then Disney, like I said, I'm going to go through these tomorrow, so make sure you're on stream. Probably going to do an Iron Condor, and that's just because Disney really isn't a big earnings mover. I think this was maybe one of their earnings, but besides that, this was the Disney Plus. But I think right before Disney Plus, this was their earning, and they barely moved. So be careful on that. I know there's going to be a lot of eyes on it, so we'll see. But if the contracts get expensive and it makes a big move tomorrow, just like Google, so now if it's pricing in a 5% move on the earnings chain tomorrow morning, and then by the end of the day it's up 5%, well, you do the math. It's probably not going to move more than it already did. So that, again, it could reach the pricing in the day of, or you'll see how the market really feels about it. Then watch Snapchat. Like I said, we're going to keep our eye for it. I'm going to be waiting. And then also watch Anthem and Cigna, all the other healthcares. Those are going to be important. Cigna moves pretty big. Anthem's a little bit more expensive, but you see Anthem's already kind of in a more of a danger zone and dropping. Cigna is falling from kind of more or less the highs, but I will watch all of these. I might even want to pick up a play on every single one of them, even though they're all going to be the same. You could just keep playing UNH, but a lot of these healthcare stocks move different, and they kind of move in waves, but I'm still going to be watching those for sure. And like I'm saying, even towards the end of the year, these could start getting really fragile. Then finally, Boeing. I like this one. Shout out to Colt, baby. I asked you guys picked up puts today, and they got expensive, but this was a big drop on Boeing. Again, surprising with what you saw the market do. But if they start testing, this hits the low, bounces up. This is what we've seen a lot of with Boeing, and it's getting, higher volume. It's getting aggressive at this lower price. I'm waiting for it to drop, so kind of like the UVXYs, I want to wait till those contracts depreciate. Otherwise, I might have to get a further out the money debit spread, which I am considering, but I'm waiting for BA either for it to drop, and again, maybe it does hit some BS and hits a lower level and bounces up, but I'm expecting volatility, big price moves. That's going to be great for earnings, but that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning, and make sure your head is in the game. I need you guys focused. You guys are seeing the Google. We're hitting the 1,000%ers. You're seeing the different tools at your disposal. Get equipped with everything and know how to use it. Ride the waves. Be patient. There is a lot going on. You need your head in the game. And again, what's happening with economics, value, and price, it's not immediately going to be reflected by the price of the indexes. Come up with the plan. Get that budget. Balance the books. You can play the earnings while you wait. Be smart with this, baby. Don't go too crazy. Don't be too timid. We need you in the game. There's that. Don't forget the coat challenge. I said this at the end of the day, baby. This is my coat challenge for the month for you. Go stand up for somebody. You gotta stand up even for your dreams, man, and what you believe and everything. You could learn that by helping out somebody. So if you see somebody getting bullied, anything, don't focus on the bully, but go focus on the person. Someone tells someone to shut up, you tell them, hey, I want to hear you. Say, someone says your company sucks, your business sucks. Say, hey, I'm interested in your company. I like what you're doing. So be positive, baby. At the end of the day, that's what you're gonna need in earnings, and that's what you're gonna be. It'll help you with your mindset. You're gonna need to be in a good mindset for whatever is about to get thrown our way. So I hope you're ready, baby. Let's go!